Breakthrough Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
30th of April, really nice to be here with you to end this session. You are at the COB. I'm Nadine Blaney. Okay, so here's the thing. We had such anticipation for those mega cap tech companies to report. And look, people I spoke with today thought they came through pretty well. Nick Markowitz from Ellerston Capital said that, it's really evident that this AI spend is being justified with what's coming through the cloud. However, we did see a couple of those mega caps fall in after hours trade in the US, thinking Amazon, we're thinking Meta, as well as Alphabet did pretty well. Microsoft did fall. So we've got US futures looking pretty negative right now. But of course, the war is still the main game. Price of oil resetting a wartime high today, and that has all put pressure on this local market. So just a quick look here at where the CBOE Australia Index finished, down by 0.2%. So I'm sure you've seen the headlines. This is the 8th consecutive session that we've seen a pullback here locally. So where are the funds flowing? And how do we sit in terms of seasonality? Well, I've got a guest coming up that I think you'll want to stick around for. He's going to tell us his take on where we're sitting here with the S&P ASX 200. But yeah, just to some of those key themes, we are definitely on a losing streak here. And with US futures pointing to a lower open there, European futures were pointing to a lower open. I wonder if we'll make it 9 days in a row tomorrow. What kind of risk will people be willing to take on ahead of a weekend where we still have a very fragile ceasefire and, of course, still worried about oil, not just now. And I think that's what's really coming through in a lot of the conversations I've been having. It's not just now of what's happening with the Strait of Hormuz being shut, but even if it opened tomorrow, there's no magic fix for getting that stuff, that very valuable natural resource through that strait and into ports anytime soon after such a disruption. All right, wartime high, as I mentioned, for oil. We'll talk about that later, and all about AI. That was the takeaway from those results in the US. We spoke with Dan Ives from Wedbush Securities. You can find that online for his take. He's always got a lot to say about those tech results. So what happened here today? Well, we'll get into it in the news a little bit more detail, but Woolworths came out today with a warning, a downgrade, in fact. So it appears as if Woolworths is going to not waste this crisis, try to get on the right side of consumers by essentially providing, I guess, a bit of relief, if you want to call it that, through this cost of living crisis. And shares have responded accordingly. Investors don't necessarily like the sound of that, down by 7% to $34.49. Also talking about, again, rising fuel prices related to the Middle East. The gold miners all took a really big hit. Evolution down by 5.25% to $11.90. Moving on with these underperforming sectors, and it wasn't just the gold miners, it was the big miners as well. So flipping the page to get to the likes, okay, well, we can't see those right now, but trust me on that one, it wasn't a great day for the miners. And looking at the energy space as well. Let's get a read, and of course with the oil price rising, that's a pretty picture being painted for Santos, Woodside Energy, and I guess a runners up, so to speak, should go to the banks. CBA up by about 0.5%. Okay, so Woolworths hitting that 2-month low on the week annual outlook, sitting at $34.49. Boss hit a 4-month low as it cut its uranium outlook for 2026. South 32 as well. The Taylor project costs are rising. There's also been a production delay. And Min Resources, it's an outlier there, with shares at a near 2-year high on an outlook upgrade coming through. Meanwhile, Stockland reported that its master plan community net sales climbed 43% year on year. Land lease community sales surged 162%. But you've got to think, when it comes to Stockland and all of the property plays, this interest rate environment is going to weigh. In fact, that did come up on today's episode of The Call. We were speaking about Center Group. If you're interested, you'd like to have a listen. And of course, I'll bring you my guest's take on the stock of the day in just a tick. But I do want to get to my guest. Joining me now is David Bird, who is from Mastering the Markets. David, really nice to have you here with us. Can you
Thanks for having me again.
just set the scene by talking about where we are in terms of the ASX? Because it's starting to feel like the trend is most certainly not our friend.
Yeah, we felt that about a month ago too, didn't we?
Yeah.
And then we had a very bullish April. And that's something that I talked about at the beginning of the month, is that April is historically a pretty bullish month. And voila, it has fulfilled April again for us. However, if you pull up the seasonality chart there, you'll see that the seasonality for the ASX 200 is typically down for both May and June. So these are two of our toughest months ahead. And I always say, you know, trading and investing is very much like surfing. It doesn't matter how good you're out surfing the waves. If you're trying to surf in whitewash, you're gonna struggle a little bit. So yeah, you can see that April very bullish, and that May-June period is typically an area to be careful of.
Okay, and of course we're on the cusp of May, of course. Now I know that I just think that if we talk top down first, you know, clearly we've got the remainder of the U.S. earnings season to get through. Clearly there's sort of a divide between the AI plays, the big tech companies, and some of the consumer exposed companies there, as well as the fact, you know, that we are seeing this divided Fed, the most divided Fed in quite some time. How does seasonality play into what you're expecting in the U.S. these days?
Yeah. So if you look at the markets, they actually have a bit of a rhythm to them. They're cycles within cycles, and one of the small cycles is a 4-year cycle. And what you'll notice is if you pull up the midterm election cycle, we're in midterms right now, okay, which is 2026. So if you count back every 4 years, 2022 was our last one, which we know that wasn't a very friendly year for the market. Before that was 2018, which again was not a very friendly period for the market as well. Before that was the 2014. We know 2015 wasn't very friendly, and before that was 2010. And we know that wasn't very friendly. So you can see it marked there on the red boxes. So every time in the last 15, 20 years, from this period here, in 2 years' time, we've actually been lower, anywhere from 17 to 37%. So we're coming into a bit of a tough period. Like the midterm year is always a tough year, and you've just got to be, I guess, what I've been saying a lot is there's times to play offense and there's times to play defense. And this is a year where you really want to play defense, and you can see it there in the data.
Okay, so that is the scene setter. Let's get to some specifics, shall we? Now, I don't mind saying that last time we spoke, we talked about hydrogen, and yeah, that video on demand sort of went off in terms of viewers. So when we are talking about hydrogen today now, what are we taking into consideration and how is it looking?
Yeah, so we spoke last week around hydrogen, and funnily enough, I wrote a mainstream article about a couple of weeks ago, and I looked at the comments, and not one single person agreed with me. They all talked about it being expensive, terrible technology, et cetera, et cetera. So that set the scene for me, knowing that retailers aren't on hydrogen right now. On the American markets last night was up 14%, and it's up 45% in the last probably month now as well. And you can see this is what we talked about last week, that it's moved from a downtrend to now an uptrend. So that's on the American markets. If we want exposure on the ASX, you've got HGen, which is, again, you can see has had a very good move from $8 up to nearly $12 there, and has again gone from a downtrend to an uptrend as well. So hydrogen's been a standout play last night, which is followed onto our markets tonight as well.
So we're expecting to see it continue if this momentum holds?
Yeah, like that's the weekly chart. So you're going to have daily pullbacks, etc., along the way. But yeah, at the moment, the trend is very strong. Yeah.
Okay, so let's talk energy, shall we? I mean, I know hydrogen's energy potentially, but let's talk some stock specifics then. Let's put it that way. What are you looking at in the local market?
Yeah. So I have Woodside, Santos, and things like that in oil, but they've run a bit hard now. And if you look at some other alternative energy spaces as well, you've got coal. So one that I really like is YAL, YAL. It consolidated for a number of years now. You can see between those big grey boxes right there, from it had a really good uptrend up until that 2023, and had about a 3-year consolidation there. It's only just recently broken out this year, and you can see it's made a new high, and actually where they used to be selling, you can now see they're starting to buy. And that little blue line you can see down the bottom, that's called on-balance volume. What that's showing me is that there's a lot of buying volume. It means there's more volume in the green days than on the red days, and that's what we want. That means that pullback's a healthy pullback. That's how markets move, and it's looking very good. So yeah, that's just broken out of a 3-year base, which is a very, very bullish signal.
Okay, what about those that are sort of servicing the energy sector? Because you would think that there would be some of those companies that would stand to benefit.
Yeah, another good one is AGL as well. So we know that's more in the utility space, but obviously the flow on from the energy space as well. And again, what you can see there is those big blue arrows pointing down, and there's a lot of sellers there for a long period of time. It had an announcement and it really shot up, had a massive gap there. It shot all the way up. It came back to fill the gap, as we know the market likes to do. And now you can see that they're actually buying where they used to be selling back at the beginning of last year. So the moment we're getting what's called a resistance support flip, old sellers turning into buyers, and that's something to keep an eye on there as well.
Okay, outside of the energy space specifically, are there any commodities or any thematics that are really sticking out to you otherwise?
Yes, there is a bit of a one that people don't have eyes on right now, which is nickel. Nickel is an industrial metal that has broken out of a major accumulation zone. You can see it there. It was sideways since 2024. It did break out at about 2-3 months ago, came back again, turned those sellers into buyers, and has just started to make a new high now. So if you want exposure to nickel on the ASX, we've really only got one big producer, and it's NIC, which you can see there. And again, you can see that blue line shooting up, lots of volume coming in. It's about to break through a key resistance there, and in a nice uptrend, looking very good as well. So NIC on the ASX is one to keep an eye on if nickel does continue its uptrend there as well.
Yeah, it had a good day yesterday and was out with a quarterly, I think. So yeah, we'll watch that one. Now, where are you seeing opportunities, if you don't mind me asking, in some really beaten down companies?
Yeah, so I've got a couple actually. So one of them's Worley, WOR. If you want to pull up the 3-monthly chart there, I can show you the kind of big picture. And you can see if you had a time machine, you'd actually be going back to the GFC lows and buying it 18 years ago. That's how undervalued it is. That's how beaten down it is. And that indicator down the bottom is called the Stotch RSI. So it's extremely oversold, about to cross bullish, which has only happened 3 times before, which you can see was the GFC low, the 2015 low, the COVID bottom, and now, and it's off a major support. If you then want to pull up the daily chart, I've zoomed in on that area, you can see that red zone right there. If we can clear that $12 mark, that's where we officially move from a downtrend into an uptrend on the daily, bouncing off that major support. So that's something I like to look for. And yeah, that's a beaten down one that could be showing some life off a major support there. Another one would be Domino's Pizza. 90% off. 90% off from the highs, 160 down to $16. And you can see that little orange circle that I've shown you there. That's a massive gap down. They brought out an announcement. The market didn't like it. It sold off. And my question to you is, well, if that news was so horrific, why did the market use it as a buying opportunity? And from that point, it's now made a new high. You can again see that blue line, how it's coming back on kind of, it's not matching the actual price action. That's showing that this pullback has happened on low volume, which is showing that actually it's kind of been accumulated during this level. And I think it was only yesterday or the day before, again, they had a really bad announcement and it dropped. But at the moment, the market's liking it and it's actually been eaten up. So I'm keeping an eye on that red zone there as well. And if it gets up through there, Domino's could be about to move into an uptrend and actually may have formed a bottom. I think the bottom was that $12 mark. So yes, that's definitely one to keep an eye on. And another one would be, I think that's it really. I think they're the, did I talk about WiseTech? No.
Well, you haven't talked about WiseTech yet, yeah.
I might just end with WiseTech there as well. If you pull up the monthly chart, again, you can see that green line going across. That's a major resistance that now has become support going all the way back to 2019. And again, the Stotch RSI very oversold. Whenever we've been down this level and we've crossed, we've always had a nice little bounce off there. So one to keep an eye on, it's down at a key level on the big picture, the monthly. If you move into the daily, I can show you what's happening there. And you can see if we can get above that $47 mark, that's where we actually move into an uptrend off that support. And that's where I would be interested. So I'm keeping an eye on WiseTech. If we can get above $47, then I'll be taking a position on that one.
Well, you've given us lots to chew over for the remainder of the day. Gotta let you go now, but we look forward to speaking again, David.
Thank you.
Take care. All right, let's get to our stock of the day, being Woolworths. We could have probably got a technical perspective as well, but I'm going to stick with this one. Our experts, Kai Chen from MPC Markets and Howard Coleman from Team Invest, weighted.
At the time, they had margins that were around about close to 2% net profit margins. Now, those have shrunk and shrunk and shrunk. And now we've got every politician under the sun talking about everything gouging. You know, we've got the banks gouging people, even though bank margins have dropped. We've got the supermarkets gouging people, even though the margins in supermarkets have dropped.
We're seeing basically a lot of politicization. We're coming into a high inflationary environment. So there's a lot of cost pressure. I mean, the cost of fuel in terms of logistics, delivering stock to the shelves for Woolworths, that's a big cost increase. But the issue is if they try to increase the price too much, they'll attract attention and basically there'll be a whole uproar in terms of them trying to price gouge. So, I think it's getting harder and harder for both Coles and Woolworths to really keep up with that inflation, especially if we go into a high inflation environment.
In a world of market noise and uncertainty, a disciplined approach to investing matters more than ever. Wealthy and Wise brings Team Invest's value investing playbook to AusBiz. Unpack how the macro environment impacts business analysis, put similar stocks head to head, and make a call on which one wins.
If we forecast it out, we're expecting a growth of maybe, say, 21%.
If we're doing a pure value investor analysis on it, it's probably not quite good enough.
Plus, ask the Team Invest experts to deep dive into a stock or topic of your choice. Just email us your questions. Live from 1 p.m. every Wednesday, Wealthy and Wise is your guide to value investing, powered by Team Invest.
And just for the record, you can email the team at Team Invest at wealthy@ausbiz.com.au. And before the break, we heard that, Howard Coleman on Woolworths, it was a hold. Kai Chen on Woolworths, it was a sell. All right, let's take a look at some of the leaders and laggards today. I love how we always start with the positive news, even if it's a down day. Well done, producers. It is ASX. Really interesting to see it take a leg up. It's got a strong revenue outlook according to UBS, lifting its price target 11% to $65.20, upgrading it to buy from a neutral. And that also comes as we had an appointment of an interim chief executive, being Darren Yip. All right, Generation Development as well, looking good. AUB, PEXA, and WiseTech Global. We were just speaking of that one. So anything about $47 was a key technical level for David Bird to get really interested, currently sitting at $42.79. Now, those that did lag the market overall, deep yellow, Westgold Resources. The gold miners were hit hard, but Westgold also saw its price target cut 11% to $8.50 per share by UBS. Also cut by Macquarie after releasing its quarterly result yesterday. Now, also Silex System, Catalyst Metals, and Genesis Minerals. Let's go to the small end of the market now, shall we? Aurora Biosurgery up by 15% to 65 cents per share. Those that really didn't perform today include Appin, down by 27% to $1.14, and Finder as well, down by 15% to 48 cents per share. What is on overnight? I mean, it keeps coming, doesn't it, from these central banks? Bank of England expected to keep rates on hold. ECB also expected to keep rates on hold. Be really interesting to hear the commentary coming from those two central banks around inflation in particular. U.S. earnings continue in the States. Apple, Eli Lilly, think GLP-1 drugs there. MasterCard, and Caterpillar as well. And there's always some read-through from Caterpillar here locally, of course, because 7 Group, or SGH, is the local distributor, I guess you would say, for Caterpillar here in Australia. We also get US GDP, which is of very much interest. Tomorrow, here locally, March quarter PPI is due. It's expected to grow by 0.9%, and Coles quarterly update will follow Woolies, Liontown Resources, and also ResMed. ResMed has not been performing, and if you go back and listen to that episode of The Call, you can hear Howard Coleman say what level, what price he'd be willing to buy some more to top up his existing holding in ResMed. Okay, let's just check in lastly on the state of the market. The index is down by 0.25%, with the S&P ASX 200 finishing at 8,666. US futures still under pressure. Brent, the price of oil is still going higher. We are watching Samsung in Asia, because it was a bit of a mixed session in Asia, extending its losses, down now close to 5%. So there's plenty to watch as this Asian session settles, and ahead of the all-important US session, of course, where we will continue to see the markets digesting those tech results. We see that reaction in after hours, and sometimes it continues the next session. Look, US Donald Trump and his administration is holding talks on, the prolonged, a blockade that's happening in the Strait of Hormuz, but I'd say, the loggerheads that they're at with Iran, and urging counterparts in Tehran to come to the table and reach a deal. That's the watching brief for tonight. We look forward to it being Friday tomorrow, and we look forward to you joining us throughout. Stay with us.